Hello and welcome to The Bottom Line here on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. In February, Prime Minister Donald Tusk announced that 2025 would be Poland's breakthrough year. Now into the second half of the year, we can take a look at some numbers and see whether those promises are becoming reality. On The Bottom Line, we want to look at some key developments impacting Poland's economy so far and what lies ahead for the rest of the year. Jan Kennedy brings us more in his report.
After a disappointing 2024, Polish exports have picked up pace in recent months. In May, cross-border sales denominated in euros rose by 4.2% compared to the same period in 2024, marking the highest increase in over a year. This growth is being driven by several factors, including improved economic sentiment in Germany, Poland's largest trading partner, particularly in the recovering automotive sector. And given how much exports have contributed to the growth of the Polish economy in the past 30 years, economists are eager to know whether this uptick constitutes a bigger trend.
We have the perspective of economic recovery in the EU, most importantly in Germany. On the other hand, there is high uncertainty related to the rather, I would say, volatile trade policy of the United States, which may also have an impact on Poland's exports.
The Polish Economic Institute suggests a 30% levy would put EU-US trade to a halt and therefore are unlikely to come into force. But 20% levies would still have a noticeable impact.
If there is a total trade war of 20% tariffs of US on EU and EU on US in the same amount, and it would mean for Polish economy 0.33% GDP loss in short term, meaning 1-2 years.
Tomorrow, all eyes will be turned to Brussels, where officials will begin negotiating the 2028-2035 EU budget, with defence spending set to play a central role.
We expect a significant increase for better protecting citizens, for security and defence. Competitiveness is a new priority, and we expect that all programs in the budget have to contribute to the improvement of competitiveness.
Since its 2004 accession, Poland has been the biggest beneficiary of EU funding. This has played a key role behind the country's development to the fastest growing economy in the EU.
One of the most important benefits of the EU membership and the EU funds has been the spending on infrastructure, which has improved tremendously, and it has also enhanced the potential for economic growth and for foreign trade. But apart from the EU funding, I think that the very fact of being in the EU and having the access to the single market has been the key advantage of.
In the current budget, set to end in 2027, Poland has received 75 billion euros for cohesion policy alone, in addition to farming subsidies and recovery funds. It remains to be seen how deep the cuts will be in the next budget and how these will impact the economy.
Is 2025 Poland's year? Exports are on the rise. We can see energy investments bearing fruit, like Baltic Power that we reported on earlier this week. Can we dare to think that the stars are aligning for Poland? To figure it out, let's speak to Mateusz Walewski, Chief Economist at BGK, a state-owned development bank. Hello, and thank you very much for joining us.
You're welcome.
So I wanted to talk about Polish exports, which are finally on the rise. This was an element of concern for quite some time amongst economists. What led to that drop in exports for so long?
I think there are a number of circumstances, but obviously the most important is the falling economic activity or hardly improving economic activity in the countries which are the main trading partners of Poland. It's mainly, it's obviously European Union and mainly Germany. You know, we can be very happy that it is still very hard competitive landscape. Polish export can be back on the rise.
Let's just bring up a graph here, a visual that we saw earlier in the report. Let's bring it up for our viewers. So we can see that there has been quite a considerable improvement, over 4% year-on-year improvement. So you say that the landscape has improved somewhat. What can we attribute this improvement to?
You know, I think we can mainly attribute this improvement of Polish exports to, slightly improving economic landscape at main trading partners, but mainly to the strong competitive position of Polish exporters. Poland is quite well known of relatively earning in hard times, because Polish products are of good quality, relatively competitive prices, and there are hard times in global economy. The importers look for such kind of products, which are good quality and lower price, and they simply change the higher prices products from main suppliers to lower prices products from secondary suppliers, as I would say, as Poland. So also the global trade can go down, Polish exports can still go up. But we also have to look at the other side of the story. If we look at Polish imports, it's growing faster than exports, and total trade balance, in fact, is deteriorating. It's the other side of the coin we should not forget about.
Because of these imports increasing as well, does that suggest that we shouldn't rest on our laurels too much when it comes to the improvement in exports?
We should always, not also, but always look at the balance. And the balance of Polish trade in goods is in fact currently deteriorating, not improving, which is not the best prognostic for the future. Polish balance of payments is during hard times. We are increasing our investments. We have a lot of investments to be done, which are very import intensive, and it will drive Polish trade balance in goods into negative territories. What really saves Poland is the export of services and balance of services. Poland still has positive balance in services, which is stable, and thanks to that, overall Polish trade balance, so goods plus services, is still positive. It's deteriorating, but still positive, which is very good from the Polish point of view of Polish economy and of our ability to further develop.
So, what Polish services are in highest demand at the moment?
Poland has quite diversified structure of services. In fact, both Polish export and goods and Polish export of services are quite diversified, which makes Poland quite a unique country in Europe. In fact, the Polish trade in goods is most diversified one in Europe. In fact, but if you look at services again, it's mainly transport services, but it's also IT services and business process outsourcing services. So all these international companies which are locating their services centers like accounting or IT or other in Poland, mainly in large cities like Krakow, Wrocław, Rzeszów, also Gdańsk, less often Warsaw, but also some of them are in Warsaw. And Poland is very strong place for this kind of services. And you know what I think important is to say that these are not the low level services. These are quite human capital intensive services, which means that they are not the basic like call centers, but as I said, IT or accounting, which also puts Poland on quite good competitive position, I would say.
Somewhat higher up that corporate structure. I wanted to ask you about one more figure, and that's industrial production. It was up in May by almost 4%, a value that's also closely watched by economists. So together with exports, does that mean that Poland can breathe a sigh of relief and carry on somewhat confidently despite the global international trade tensions? Or is this just a momentary improvement? Probably not, given what you've just shared about imports.
Yeah, the dynamics of Polish exports are obvious. Dynamics of Polish industrial production are quite strongly correlated to dynamics of Polish exports, because huge part of Polish industrial production goes to export. It is driven by export demand. So obviously, whenever we have positive dynamics of exports, we have positive dynamics of industrial demand. So obviously, I don't want to repeat myself, but it only simply shows the high competitive position of Polish industrial exporters, and that's what we can say now. What is the plan for the future for Poland is to move higher in this value chain position. Yes, from simple delivery of semi products to high quality, high tech technological intensive products, and also exporting under our own brand, which is quite rare in Poland, in fact.
Do you think that Polish exports can carry on growing, developing at the same level as it has been over the last 3 decades?
Frankly speaking, I don't think so. The landscape for global trade is deteriorating. We have increasing trade barriers, not only customs, not only custom duties, but also simply increasing tendency in the global players to insource more, to locate their suppliers closer to their borders. So obviously, Poland can gain on that, but it will also lose. If we have general harder competitive landscape with the total relation of trade to global GDP is falling, not growing, it's always harder for exporters to grow. But I think that in relative terms, taking into account competitors of Polish exports, Poland as the country will gain. So we can be growing slower than we did, but the share of Poland in global trade will still be increasing.
And we have another challenge that lies ahead, and obviously those are the tariffs that Trump wants to slap on the EU at 30%. What do you think that impact is going to be on the Polish economy?
Obviously, it's hard to calculate because share of US in Polish exports is a little bit higher than 3%. It's 3.4, I think, according to our last statistical data. But if we look at the high dependency of Polish exports on Germany, and Germany is much more dependent on especially on automotive sector, is much more dependent on US market. Obviously, we cannot depend only on this one number. The total share of US in Polish exported 3%. So I think that the total effect will be higher than measured only by this number. But it is obviously not so substantial as we could predict. It can influence Polish growth rate, but it will not definitely put us in negative territories.
On Wednesday, the European Commission will announce the structure of the next EU's budget. Many additions are expected, including defence, competitiveness, and obviously support for Ukraine. But the budget will stay the same, so we're expecting some cuts. And our bet is on the cohesion funds, the money that Poland needs to build roads and schools, and obviously agricultural funds are in question. What are your thoughts and expectations on that front?
Now, obviously, it's just the beginning of negotiations. Yes, the budget has to be finalized in 2027. So it is just the proposal of the European Commission, and I think a lot can change during the course of negotiations. I think it will be hard. There are still countries in Europe, I think, that are not so eager to increase resilience-related spendings. They are still much more interested in supporting their social and economic structures. So I think the negotiations will be hard. There are also rumors that much less will be given to regional governments, much more will be given to central government then to decide what are the priorities on local level, which obviously can be slightly politically more complicated in case of some countries. The decisions about this about distribution of money has to be done locally, not in Brussels. So I think I think there will be a lot of discussions afterwards. But in general, we know that they will be more for resilience, less for cohesion. But there are also some analysts who claim that countries of eastern flank of European Union can gain because they should gain on this resilience related or defense related increases. So we will see tomorrow, but we should treat it not as the end but as the beginning of the story, in fact.
This year, Poland is obviously fighting to keep its economic expansion at over 3% GDP. Do you think that Poland can keep this up without this level of EU funds? Because obviously there are concerns that Poland isn't actually going to get that same level of EU funding. And a lot of economists that have come on our show have emphasized this huge impact, the importance of these EU funds for Poland's economic growth. Do you agree with that? How much do you think that Poland actually depends on these EU funds to sustain its economic growth?
Obviously, it is true. Obviously, we will get less money in relation to our GDP, both because in nominal terms the amounts will stay more or less the same, but also because simply Polish economy is growing. So we are growing off the EU funds. The more developed country we are, the less will be the role of EU funds in our development. So it's natural process, and obviously we can comment it. We can say that it will hamper Polish growth. Yes, it will hamper Polish growth, definitely, but it's the natural process, and fighting that will be simply, it will simply be inefficient. Yes, so there are countries which are the higher needs than Poland in social terms. Poland is in high needs in resilience terms, and as I said, potentially we will gain on this change of priority of European Commission. But I wouldn't. Obviously we can analyze it. We can comment on that. But we should not count that the role of EU funds in Polish economy will be the same as it was 20 years ago, because simply Poland is much richer, much more developed country, and we should not think in this direction, because it's illogical, I would say.
Okay, thank you so much for your time. Mateusz Walewski, Chief Economist at BJK, a state-owned development bank in Poland. Thank you so much for your time.
Thank you.
And that concludes the bottom line for today. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. In the meantime, for the latest in regional business, follow us on X and on tvpworld.com. Goodbye.